Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive analysis of the Coca-Cola Company, ticker symbol KO, one of the most iconic brands in the world and a staple in many investment portfolios. Whether you're a long-term investor or just curious about this beverage giant, stick around because we're breaking down everything from financials to recent performance, valuation, and more. Let's get started. So, why are we talking about Coca-Cola today? Well, it's a company that's been around for over a century, and it's not just about soda anymore. With a massive global presence and a portfolio that spans multiple beverage categories, Coca-Cola is often seen as a defensive stock with steady dividends, perfect for uncertain markets. Plus, with recent earnings reports making headlines, I thought it was the perfect time to take a closer look at where this company stands and whether it's still a solid pick for your portfolio. Let's jump into the details. First, let's talk about who Coca-Cola is as a company. Founded way back in 1886 in Atlanta, Georgia, where it's still headquartered, Coca-Cola is a global leader in the non-alcoholic beverage industry. We're talking about a company that operates in over 200 countries, selling everything from classic Coke to water, sports drinks, teas, and even coffee through brands like Dasani, Sprite, Fanta, and Minute Maid. Under the leadership of CEO James Quincy, Coca-Cola employs nearly 70,000 people worldwide. Their business model relies heavily on a network of bottling partners and distributors, which allows them to scale efficiently while focusing on innovation and marketing. It's a powerhouse in the consumer defensive sector, and with a market cap of over $335 billion, it's a name that's hard to ignore. Now, let's break down Coca-Cola's revenue streams to understand where their money comes from. For the fiscal year 2024, the company reported total revenue of about $47 billion. When we look at product segments, concentrate sales made up the largest chunk at roughly $27.7 billion, while finished products contributed around $19.3 billion. They also have smaller segments like global ventures at $3.1 billion and bottling investments at $6.2 billion. Geographically, North America is a massive market for them, generating over $18.6 billion, with the United States alone being a key driver. Europe, Middle East, and Africa brought in about $7.4 billion, while Latin America and Asia Pacific contributed $6.5 billion and $5.1 billion, respectively. What stands out here is their global diversification. No single market completely dominates, which helps cushion them against regional downturns. Moving on to earnings, Coca-Cola's recent results have been a mixed bag, but there are some bright spots. For Q4 2025, they reported earnings per share of 58 cents, beating expectations by a penny. Over the full year 2025, their EPS came in at 3.05 cents, up from 2.47 cents in 2024, showing solid growth. Net income for 2025 was $13.1 billion on revenue of $47.9 billion, compared to $10.6 billion on $47.1 billion the prior year. Organic revenue growth was strong at 5% in Q2 2025, with all segments contributing. However, their Q4 revenue did miss estimates slightly, which led to some downward pressure on the stock price initially. Still, their ability to raise prices and drive growth in key categories like zero-sugar drinks, which saw double-digit volume increases, is a positive sign for future performance. Diving deeper into their Q2 2025 earnings call, management highlighted a few key points that caught my attention. They emphasized their 5% organic revenue growth, driven by strong performance across all operating segments. Volume growth was up 2%, with sparkling soft drinks and hydration categories leading the charge. They also pointed out their focus on digital transformation and sustainability initiatives as long-term growth drivers. Looking ahead, they provided upbeat guidance for 2026, expecting continued momentum despite some macroeconomic headwinds. It's clear they're confident in their ability to adapt to changing consumer preferences and maintain their competitive edge. Let's take a closer look at Coca-Cola's financial health through their key statements. On the income statement side, their gross profit margin for 2025 was an impressive 61.6%. Showing they're maintaining strong profitability on their sales. Net profit margin came in at 27.3%, which is solid for their industry. From the balance sheet, total assets as of 2025 were $104.8 billion, with cash and equivalents at $10.3 billion, giving them decent liquidity. Their current ratio is 1.21, indicating they can cover short-term obligations comfortably. However, their debt-to-equity ratio sits at 1.52, which is a bit high, so they're carrying a fair amount of leverage. Return on equity is a standout at 47%, meaning they're generating excellent returns for shareholders. Looking at cash flow, free cash flow for 2025 was $5.3 billion, down from $9.7 billion in 2023, which could signal some reinvestment or operational challenges, but still a healthy figure overall. Now let's talk valuation. At the current price of around 78 per share, Coca-Cola's trailing PE ratio is about 26, which is a bit above the industry average of 36 for non-alcoholic beverages. Their forward PE for 2026 is estimated at 21.9, suggesting the stock might be reasonably priced if earnings growth continues. Price-to-sales ratio is 7.1, which is on the higher side, reflecting the premium investors pay for a stable, dividend-paying stock like this. Their dividend yield is currently 2.58%, which is attractive for income-focused investors, especially with a consistent history of payouts. Warren Buffett's Berkshire Hathaway has famously held this stock as a forever holding, partly for that reason. Enterprise value is around $375 billion, factoring in their debt load. Overall, the valuation seems fair, but not exactly a bargain, priced to perfection, as some analysts have noted. Let's break down Coca-Cola's strengths, weaknesses, opportunities, and threats in a quick SWOT analysis. Starting with strengths, their brand power is unmatched. Coca-Cola is synonymous with beverages globally, and their financial performance remains robust with consistent revenue growth. They've got a diversified portfolio and a massive distribution network. On the weaknesses side, their reliance on sugary drinks poses a risk as health trends shift, and their high debt levels could limit flexibility. For opportunities, growth in emerging markets and expansion into healthier beverage options like zero sugar and hydration products are huge. Plus, their focus on sustainability could win over more consumers. Threats include intense competition from PepsiCo and others, regulatory pressures on sugar content, and currency fluctuations impacting international sales. Overall, they're well-positioned, but they need to keep innovating to stay ahead. Looking at recent stock performance, Coca-Cola has shown some solid moves. Over the past week, the stock is up 0.13%, but zoom out to the past month, and it's gained an impressive 11.47%. Over 3 months, it's up 9.76%, and year-to-date, we're looking at a 16.27% increase. Over 5 years, the stock has risen 56.26%, which is a steady climb for a defensive name. Compared to the broader consumer defensive sector, which is up 58.51% over 5 years, Coca-Cola is tracking closely. After their Q4 earnings, the stock saw a 2.5% pop in a single day, reflecting investor optimism despite the revenue miss. Technically, it's trading near $78 with support around $75 and resistance near $80. If it breaks above $80, we could see more upside in the short term. Now let's dig into an intrinsic value analysis to see if Coca-Cola is over or undervalued. Using a discounted cash flow model, we're projecting future free cash flows based on historical growth rates and discounting them back to present value. We're assuming a conservative revenue growth rate of around 3 to 4% annually, in line with their recent trends, and factoring in their current free cash flow of $5.3 billion. We'll use a discount rate of 7%, reflecting their low beta of 0.36 and the stability of the business. Terminal value will be calculated using a perpetuity growth rate of 2%. After running the numbers, the intrinsic value per share comes out to approximately $85. Compared to the current market price of $78, this suggests Coca-Cola might be slightly undervalued, offering a potential margin of safety for long-term investors. Of course, these calculations depend on growth assumptions and market conditions, but it's a good starting point to think about whether the stock is worth adding to your watch list at this level. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. all in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.